Hi there. This is Christian Dye and Mike Stewart. We are here to uh, allow you guys to figure out what's the best options coming up in the tail end of 2020 over here. So, stocks versus real estate is our topic for today. Many of you already know me, Latitude West Financial. And Mike Stewart is from Oakland Realty downtown, one of the top producing realtors since 2005. And what we're going to do is we're going to give our assessment of what is going on, first of all, in the real estate market and how this compares whether our money should be in real estate or in the stock market. So let's dive right into it over here. One thing that we want to say is that the information given today is not to promote the buying or not buying of any real estate or stocks. We advise you to do your own research. We're only doing this for educational purposes only. And for those of us joining us, let's just a quick reminder, let's all stay on mute. Okay, so stocks versus real estate. One of the things that we wanted to talk about is what are the pros and cons? Which is the better investment and where should our money be? Well, the quick answer to that is it depends. It entirely depends. So what we want to do is we want to say, well, what does it depend on? So my quick answer is it depends on what's your time frame. How long is the money going to be invested for? The second thing it depends on is how much initial capital do you have? You could invest $10 into the stock market. You can invest $100 into the stock market. You would need significantly more to invest in the real estate market. And the other one is what is your knowledge base? You know, are you good at researching stocks, or are you passing it over to an advisor? Do you come from a background where you know how to manage real estate, or you know how to research good quality real estate? So that's why the quick answer is it depends. But here are some things to consider over here with real estate. What are the pros as to why I personally love real estate? It's got long-term stability. This is a leveraged in it has the possibility, of course, to be leveraged, especially if you are don't have cash to put down on a $500,000 property. Well, if you were wanting to buy $500,000 of stocks, you would need 500,000 unless you were going to put it on margin, which I also wouldn't recommend. But with real estate, of course, the banks are more than willing to lend you this with 20% down on your own personal property, as little as 5% down. So because of this, you have this capacity of a much, much larger investment that's growing at a similar ROI. Now, the other thing I like about real estate is that you've got this ability to re-leverage capability. And what I mean by that is when your real estate is showing equity, so let's say it's showing 100 grand of equity, 200 grand of equity, we could use that to purchase more real estate or potentially more stocks. You cannot do that with stocks. It's very, very rare that a bank is going to allow you to borrow against your stocks without selling them. So here's some of the cons on real estate. This high initial investment, okay, because like I said, with a 20% down payment, we're not talking a few $100s. It'll be in the tens of thousands. And you really have to have a long time frame horizon. If you want to liquidate that real estate within 1 year or 2 years, you might not have any of the values that you thought you would get. So what are the pros and cons of stocks? You know, in the short term, you could have some fantastic, significant returns. For example, we were talking to our clients about when COVID hit in March and the markets were down by 27%. We were talking to them about strategies to go inside the real estate market. And we were even talking about them about leverage strategies. So some of our clients who leveraged in $100,000 into the markets, they're up by 80%, some of them at the position we're in now. Some are only up by 10%, 12%, 15%. So in 5 or 6 months, our money has gone up by 15 to 20%. Well, you're not going to get in that in the real estate market. It'll be very, very rare for you to buy something, sell it 6 months later, and be 20% up. Very, very, very rare would that happen. So stocks could potentially have shorter term gains. You'll also have much greater diversity capability. Now, what are some of the cons? It's difficult to impossible to leverage. So if you wanted to use those stocks to buy something else, you'd pretty much have to sell them, which of course would mean a taxable consequence. And there's going to be a lot more volatility, a significant amount of volatility. You're not going to get real estate that is going to go, you know, negative 33% one year and then positive 52% the next year. But stock market does have that volatility over there. Okay. So from me as an advisor, this is what I see as stocks versus real estate, the pros and cons. So I'm going to shift gears a little bit to Mike. And Mike, of course, in the real estate business. First and foremost, Mike, I wanted us to tell everyone listening what is happening right now in Vancouver real estate. A lot of people have come to this talk to hear about that. So,
yeah. Thank you very much, Christian. Really interesting stuff you're talking about there. I love that kind of approach. Basically, what's happening in the real estate market here in Vancouver is COVID-19. It is affecting everything. So prior to COVID-19, there was sort of a shift starting at about the mid-1980s for people to go from low density areas of the city, the suburbs, and move into the core, okay? And you know, that was a shift from 1945 to about 1985, where people were going from the core out to the suburbs and out to low density places. So so basically up until COVID, everybody was moving into the core. COVID strikes, what does everybody want to do? They want to be away from other people. They don't want to be getting into elevators with people. They don't want to be in hallways with people. They don't want to be in close proximity to people. So what you've seen during the COVID-19 period is people have been leaving high density housing. Okay, so condos, think condos downtown, condos in Metrotown, condos in high density places. If they're renting, they're giving up those rents and they're renting something bigger. If they own these properties, they're selling their high density properties and moving into low density properties. And the reason why we know this is because of a concept called sales ratios. So say, for example, in a given market, in 1 month, you have 100 listings, okay? And you have 20 sales in that 1 month in that area. So what that means is you have a 20% sales ratio, okay? So what we're seeing for areas that are higher density is much, much lower sales ratios than we're seeing for areas that have low density, okay? So property areas and property types that are very busy are single family houses in the suburbs, you know, cabins, vacation properties that are further out, accessible to Vancouver, but it's kind of a pain in the backside. You know, it might take you 45 minutes to get downtown or an hour and a half to get downtown. You might have to take a ferry, but you can still get downtown. So places like Victoria, Nanaimo, Squamish, the Fraser Valley, Bowen Island, very, very busy, very, very busy. And at the high end of the market, single family houses on the west side of Vancouver, very, very active. Now, properties that aren't doing so well right now are condos in the core of downtown Vancouver, Metrotown to a lesser extent, Burquitlam Town Center, places like that where there's more density, where people are feeling anxious about having to get in an elevator to get down to their car to go do their shopping, or you know, having to get into an elevator to go and walk their dog because they feel anxious about being in close proximity with people because they're concerned about COVID. Secondly, people are working from home, so they want to have space to work at home, particularly if they're a couple. You know, if two people are working from home in 500 square feet, that gets tight and tired very quick. So a lot of these people want to have more space to work when they're at home. And so that's really what's changing the market. Now, in this situation, I see opportunities. Like, for example, downtown Vancouver, you're starting to see some very good deals being had by people who are looking to the future, okay? Right now, rents across Canada, but more so in the downtown core of Vancouver, are actually falling, okay? Now, as an investor, that might, you know, make you feel uncomfortable, but that actually is an opportunity because there are people in the downtown Vancouver market and in other markets that are high density that are getting less rent and they're deciding, you know what, I've just had enough of this, I want to sell. And you could very well get a very good deal on some of these properties. Now, the reason why rents are coming down is for several reasons. First and foremost, COVID has stopped any immigrants from coming to Canada. New people to Canada always start with a rental. They very rarely buy, okay? Second thing, foreign students. There's no foreign students coming because, again, COVID-19, okay? And then another thing, another business that isn't happening in terms of rentals is Airbnb. nobody's traveling. For example, today at 3 p.m. they just came out with provincial government just came out with a restriction on traveling within the province. People aren't going to Whistler, they aren't going to Tofino, they aren't moving around. So Airbnb is in big trouble. So all these furnished rentals have hit the unfurnished rental market, and then a lot of these people, if they can't rent them, they're going to try to sell them. So there's some opportunities here for high density properties, because I think, and mark my words, and I'd love for anybody here to come back in a year's time or 2 years' time, once we have a vaccine, widely distributed through the population, I think these properties are going to see a huge rebound in terms of rental rates, and then I think vacancy rates are going to go down. And I wouldn't be surprised if you see prices surge once people realize that COVID-19 situation is under control and people can be comfortable living in high density areas. Now, I'm quite sure all of us know why we were all living in high density areas. It's because you could walk to work, you could walk to great restaurants, great shopping, clubs, bars, etc. You could get to the seawall. You didn't have to get in your car. You didn't have to sit in traffic. You didn't have to do all that stuff. So I see some real opportunities with condos in the downtown core and other high density places where there are a lot of people who are very concerned about being in these buildings and renting in these buildings and living in these buildings.
You know what? I definitely concur over here. Is my sound okay on your side, Mike?
Yeah, I hear you just fine. Thank you.
Okay, perfect. Because I've basically seen this type of thing before in my kind of real estate investing history. People panic. They think that whatever situation we're in, whether it's a 2008 or a 2001 tech bubble, they think it's going to last forever. We're already seeing the vaccine and signs of it. We're already seeing this. And the idea, I know I am completely ready to pull the trigger. As soon as they say I could travel, I'm on an airplane with the kids at a hot destination, in a VRBO or an Airbnb. There's just, or a hotel. I'm just waiting for the green light. That's all I'm waiting for, is the green light. And so I do think you are 100% correct. If people right now, and you're seeing these sort of discounts, and I think that's the important part about working with someone like Mike, someone who knows what's going on, who could sort of say, if you're an investor, here's an opportunity. And here's where it is right now. And the thing is, Mike and I do this this webinar once per month. It seems the opportunity shifts from month to month. It's not always the same opportunity every single time. So thank you, Mike, for the quick update over there. I wanted to kind of be a moderator over here. Tell me, what's it like asking price right now? Is it under asking, over asking? Are they all correctly priced? Tell me, what's going on?
Interesting question. So again, back to that whole thing about sales ratios. So in places like North Vancouver, west side of Vancouver, the Fraser Valley, Squamish, Victoria, Nanaimo, those markets are hot. You're seeing prices selling, properties selling at and sometimes above asking price. And the reason being, as we've mentioned before, and as I've hammered on before, we have ultra low interest rates. That's the Bank of Canada saying, hey, we want you to buy real estate. We want you to invest in properties. Okay. And so, yeah, so those markets where people can get space and people can get larger spaces and have sort of social distance from other people, those markets are doing fantastically well. Condos downtown, having a definite challenge. Condos in high density places, definitely having a challenge. Properties are selling, don't get me wrong, the market is not dead, but it is not as strong as the low density areas. So really interesting market situation here. Overall prices have been rising and are rising, and sales volumes are up about 29% compared to last year, this month last year, and sales are above the 10-year average. But again, more of that activity is in lower density areas.
Fantastic. So one of the things, future outlook for 2021, you collect so much data, Mike. I know that you're a huge data guy. Tell me, what have you been hearing? Where do you think our market's going to go in 2021? For those people who are thinking of waiting on the sidelines and waiting, what are the predictions right now?
Your crystal ball is as good as mine, but the way I look at things is I think we're going to see continued increases in the price of property in Canada and in Vancouver in particular, because the Bank of Canada and the federal government use real estate as a way to reflate the economy. You know, right now there's been a lot of talk about we here in Canada being in a 90% economy, where 90% of people are working, 10% of people aren't. We can't do all the things we want to do. We can't spend all the money we want to spend because of the COVID restrictions. I think once those COVID restrictions go away, you're going to see the real estate market boom, because there's going to be a lot more people wanting to come here and stay here, wanting to rent Airbnbs, wanting to rent unfurnished rentals, and just want to be here in Vancouver. Also, if you listen to what the Bank of Canada has been saying, the ultra low interest rates that we have right now, they have very explicitly said they're going to keep those ultra low interest rates for a significant period of time after the recovery has begun. And we're just starting with that recovery. So you're going to see interest rates being low for quite some time, which is going to make the cost of ownership of a property very, very low. And now Christian's going to do some numbers for you, but you know, right now with, you know, you can get a mortgage at under 2%. I've seen mortgages as low as like 1.7, 1.6% on a 5-year fixed. You know, that's fantastic numbers. You know, if inflation does increase over 2%, you're getting paid to borrow that money. So there's some really good opportunities in terms of buying property, in terms of the financing of it. It can be so inexpensive in terms of your cost of money.
No, that's fantastic. That's fantastic. Before I dazzle everyone with my math over here, Mike, you have tons of clients who are investors, tons of clients who are investors. And a lot of these guys, wealthy guys, you know, they might have money in the stock market. What's your quick take on the pros and cons of what you see of stocks versus real estate?
Yeah, for me, what I like about real estate is it's a tangible asset. It's never going to go down to zero. Okay, with the stock market, sometimes you have these accounting scandals where what we thought was a great company all of a sudden turns out to be rotten, and the value of the stock goes to nothing, or a company goes bankrupt, you own the stock in. That doesn't happen with real estate, which is very nice. Second thing with real estate is you can live in it, which is lovely. You know, you've got an asset that is increasing value and you live there, and better to pay a mortgage and live there and get the upside on capital or market appreciation than pay somebody else's mortgage. Another thing I like, just one last thing, one thing I really like about properties and single family houses with a suite is there's a lot of tax advantages for that. Now check in with your accountant, but it can be very, very good, particularly for people who are maybe self-employed or high income or that sort of thing. So check in with your accountant as part of this process. Really important.
You know, and just to add on to that one point over there, except for tax-free savings account, any stock, any investment, mutual fund, even RRSPs, they will eventually see a capital gains tax, except for the TFSA. But the TFSA is a very, very small amount of money. But your own personal property, all of that appreciation is capital gain tax free. So if no one has ever, done this analysis for you, that's what my financial practice does with our clients. Because I still get clients who come and they said, I'm going to rent and I'm going to invest my money in the stock market and I will do better come retirement because the Vancouver prices are too high. I'm like, who taught you the math? Has anyone sat down to compare the math on the capital gain savings, the leverage, the amount of rent? It's insane. But anyway, I don't want to get on a rant, but I do want to start talking about what a lot of people came here for. Let's see some numbers. What is a side-by-side comparison? So the first thing that I want to do is make sure that everyone understands the understanding of ROI, the return on investment. The ROI on real estate, there will be an ROI on real estate, and there will also be an ROI on stocks. It'll be a number as a percentage, but the one thing I want to show, I want everyone to understand what the ROI means. So it's the annual rate of return, interest rate of return, compounded. Okay, so it's a yearly rate of return. So if we take a look at the stock market, and I'm going to use the S&P 500, which is essentially the 500 largest stocks in the United States, which is the biggest stock market in the world, their ROI in the last 20 to 50 to 80 years has been hovering somewhere between 8 to 10%. But of course, there's management fees and there's a lot of other factors. So a really good rate of return, in my opinion, would be a solid 8% in the stock market. Some people who invest in stocks might say, I get 12. Some other people might say, 5 is good for them. So we know around what a good number is at least. Okay. So here, what I want to do is I want to do a side-by-side comparison as an example. So if I had $60,000 right now to invest somewhere, what do you think I should do? Let's say that 60,000 is a down payment on a 1-bedroom, $300,000 condo. Or I could put that money directly into the stock market. And just to make it side-by-side comparison, I'm going to use a 25-year time frame because that's what my mortgage is going to be, 25 years over here, okay? So we do have to have a couple of assumptions over here. One assumption is, what's the rate of return on the stock going to be for the entire time? I'm going to assume on your best day, you're going to get a consistent 8% the entire 25 years, okay? On the condo, I'm going to make the assumption over here that it's going to appreciate at the same rate the entire 25 years. I'm also going to assume that we're starting with a 3% loan rate. I didn't want to use a really, really low loan rate because everyone knows that the rates can change later. So those are my first two assumptions right here. The other assumption is that you're going to have a renter who is going to pay off a portion, if not the entire mortgage, a steady rental income. So if you're working with a good advisor, they should be able to also calculate what vacancy is and all of the other fees. So now I'm going to use my financial calculator, and the session isn't long enough for me to teach you how to use one. But for those of you who do know how to use a financial calculator, you can follow along. If you want to download one onto your phone, and if this is a recording, you could sort of stop and pause it along the way, okay? So we have a present value, we have a payment, a monthly payment, we have the future value, the rate, and the period. So here we go. So I have a $240,000 mortgage, okay, because I put $60,000 down payment on my $300,000 condo. So the first thing I'm going to do is at a rate of 3%, and I use 300 months because that's 25 years. How much is my monthly payment going to be? So I calculate that I'll be paying about $1,133 per month in order to live in this, in order to buy this condo. But what are my assumptions? Well, there's going to be a strata fee. There's going to be property taxes. There's going to be insurance. And then, of course, I have my mortgage. So let's just say I'm out $1,600 per month. Okay, there's my first assumption. I'm out $1,600 per month. Now let's say that rent only covers me for $1,400. I'm a little bit low on the rent over here as compared to it. Now, of course, if you want to add vacancy or if you want to add a property management fee, if you have those things over there, just throw it in. Maybe it's not negative 200, maybe it's negative 300. But right now, and maybe rent is higher as well. So now I'm just going to use, to keep the numbers nice and round, I'm just going to say that I have a $200 per month shortfall. Now, whenever I deal with a client, I always tell them to try not to get a property that has too great of a shortfall. Now, a small shortfall is okay because here's my assumption. Rent goes up and mortgage goes down. So if rent goes up and mortgage goes down, in 5 years from now, usually my shortfall seems to have disappeared over here. And so now what I end up getting, I'm going to assume that the shortfall is only going to last for 5 years. Just a reminder, let's keep our microphones on mute over there. There we go. Okay, so here, now what I'm going to do is I'm going to say, well, what does this look like for the stock? Okay. So now I've got a $60,000 stock. Now, in order to match the condo, I got to keep contributing the $200 a month for 5 years that I had a shortfall for. So I'm actually going to take $60,000 invested in the stock market, and I'm going to put in another $200 per month for the first 5 years, just to keep these things comparing an apple to an apple. So after 5 years, I'm going to have $102,748. That's what the value of my stocks are going to be. Now, for the next 20 years, there's no more 200. I don't owe any more money in order to compare it at 8%. So now I'm going to have a little under $500,000. So 478,000. Now, in my point of view, this is on your best day because I'm doing an 8% consistently. Try to get a money manager that gets a consistent 8% over 25 years. It's not as hard as it looks, okay? All right, so now I've got my 478, okay? Now that I've got my 478, now what I want to do is I want to say, what is the value of the condo going to be, and how does this compare to the 478? So I got a $300,000 condo over here. I got to take an assumption of the growth rate. Now, Vancouver condo probably is going to be around anywhere around 4%. A house with land, maybe around 6%. And if you said, I don't think it'll be that high, we could use a lower number if you want. If you think it's higher, we could use a higher number. So what I did is I picked a low of a 4 and a high of a 6. So in 25 years, what will the value of the property be? $300,000 is going to grow at 4% annually. That's my ROI for 25 years. This will land at $800,000. That will be the value of that condo in 25 years if it just grew by my assumption of 4%. Now, if it grows at 6%, 1.287. So I believe that that condo is going to be somewhere between $800,000 and $1.3 million in value if it's in Vancouver, because that is what Vancouver's history has shown. So the stock, remember, was at 478. Even if I bring the number down further, we are going to find that the stock will win out for other reasons as well. So here are some of the other advantages. Mike already said, you have tax deductions. You could deduct the interest off of the mortgage. You could deduct the strata fee. You could deduct the property taxes. You could deduct any form of vacancy, okay? You could leverage it to reinvest. After 5 years, not 25 years, after 5 years, let's say you have $80,000 of equity, you could actually pull that equity out and reinvest it into another piece of real estate. You could reinvest it into the stock market. The future rents, and this is my favorite part. The future rents are infinite cash flow, unlike a stock. Now, if the stock had a dividend that it was giving, it would be similar, but I don't think it would be any close to as high as the rents that you're going to get. So how much are the rents going to be? In the first year, the rents were $1,400, but in 25 years, how much is the ROI going to be on rent? Now, I'm going to use the number 3% because I've done this analysis, and that's about how much the average rents have gone up per year. That doesn't mean if you're a landlord, you're allowed to increase the rent by 3% per year. You could only increase it by whatever the government says you can increase it by. But if that person moves out and you now go back to market rent, you're going to find on average it's about 3%. So I'm going to use a 3%. So in 25 years from now, how much rent am I going to get per month for a fully paid off piece of real estate? $2,900 a month. $2,900 a month in rent, and that's just in year 25. It keeps growing and growing and growing and growing. So I own multiple pieces of real estate for this reason. This to me, especially if there's any people out there that's self-employed, this is a pension. What I've done is I've just shown you how to create your own self-funded pension, okay? So these are some of the reasons why I love real estate. So I've compared stocks versus real estate. Now, don't get me wrong. Do I like the stock market? I do. I do like the stock market. As a matter of fact, I think in 2020, we had a fantastic opportunity, which many of my clients and myself took advantage of. Right now, I do say if you have a question, throw it in the chat, and we're going to get to that question over here at the tail end here. The philosophy here at Latitude West has always been a mixture of stocks and real estate and a form of reserve. I invite those people over there that love real estate, but also have money in the markets, but they don't have a good financial advisor that's combining the three together. Stocks, real estate, and a form of reserve, which allows us to take advantage. One great piece of reserve is the equity inside of the real estate themselves, okay? So what is my conclusion over here? Markets, don't try to time markets. Instead, try to create a strategy. I don't try to predict the markets. I try to create a strategy that will work in any market over there. I review the strategy with my clients to see if it makes sense. I always like a long-term horizon, which is probably why I like real estate so much over here. So at Latitude West, we do a discovery meeting. Discovery meeting doesn't cost anything. It's just us getting to know you and you getting to know us. If you want to book a discovery meeting, at the end, I'll show you how to get in touch with me. We do assessments on multiple real estate properties to see if that makes sense. Should I buy one or should I buy two? Should I leverage off the one to get a second one, or potentially in a few years to even get a third one over here? So one analysis that was done by Manulife Financial is they found that by using an advisor, your wealth multiplies as opposed to you not because they could beat the markets, but because the advice and the strategy is things that you yourself might not have known about. And that not only includes advisor financial, but it could be a real estate advisor. It could be Mike helping you to buy your second, third, and fourth property. It could be helping you to see whether it makes sense to sell your condo, to upgrade it to a house, or to keep your condo, be a little bit tighter on cash flow, but to buy the house without selling the condo. That's what a good advisor can do. So put your questions in the chat over here. Vancouver Real Estate Outlook 2021. It should be on our website now. If you want to join this, Mike and I will be assessing what's going on to cap off the year. I'll be looking at the stocks as well as the real estate. So I will be doing a stock report. December 17th, 6 p.m. The way to register is through latitude-west.ca/workshops. Okay. Gratitude to the frontline workers. Mike has mentioned that, we are a little bit more on a shutdown right now. So please, everyone, stay safe, follow the rules. And of course, if anyone out there is a healthcare worker, we admire you. We know that you are doing a great service. So while questions are coming in over here, I want everyone to know how they can get in touch with us. If you want to get in touch with myself, go through my assistant at latitude-west.ca. As I mentioned, if you just want to have a conversation, you're maybe looking for a good advisor who could integrate real estate with what you have in the stock market, as well as all the other financial planning. It doesn't hurt to have a conversation. At the very least, I'm going to point you in the right direction. Mike, of course, could be connected at mike@mikestewart.ca or at 604-763-3136. I'll leave this on here for a while. For those of you who've got to go, by all means go. Thank you for coming. For those of you who'd like to stay on the line right now, we will see, is there any questions out there that anyone had for us?
We do have a question from Kiavash. Thank you. He asked percent allocation of stocks, real estate, and reserve. So you had that,
yes.
Maybe you can take it back and we can go back to that one. Yeah. So maybe you could talk a little bit more about this, Christian.
Absolutely. So the quick answer is it depends on the stage of life that you're at. But to give you a little bit of background, the wealthiest investors in the world are part of a group called the Tiger 21. They're studied every single year, and everyone wants to know, where is their money? Where is their money? They found that they had about 40% of their money was in the stock market or in their own business. A lot of these guys own their own business. They had about 22% in real estate of their total net, of all of their assets, of all their net worth. And in reserve, they had about essentially the remainder amount. Oh, sorry, my numbers are wrong. I apologize. They had 22% in reserve, and then the remainder, which was almost 30%, was in the stock market. In the real estate market. Now, I personally have a lot of my wealth in the real estate market, so I am a little bit biased. But remember, when I said, what is your knowledge base? My knowledge base of real estate is very, very high. Mike's knowledge of real estate is very, very high. So if you were to talk to someone like us, perhaps the majority of our wealth might be in real estate. But for the average person, I would not put an enormous amount in any sector that you were unfamiliar with. So the sector that increases is the one that increases with your knowledge. As your knowledge increases, then you should put more into it. But if it was me and I was giving advice to one of my children, my children are very young, but when they hit their 20s, my advice is going to be to start with the stock market in order to build a down payment. Once you have the down payment, shift it into real estate. Grow the real estate. Pull the equity out as soon as you possibly can, which I would say is probably about 4 or 5 years, and to reinvest it into more real estate. However, if the stock market happens to be crashed or down, take some short-term 1 to 2 year gains off of the leverage, which is exactly what happens. So it's very, very rare. Stock market crashing happens once every 10 years. Stock market, deal of a century happens once in a lifetime.
And you only lose the money when you sell. So if you don't sell during a crash and you wait for it to come back, you're not losing.
Absolutely. And what I've always said, and here's some quick numbers over here, and I tell my clients this, if the stock market is down 20% ROI from its peak, then you have a sale. If it's down 30% from its peak, then you have the sale of a generation. Historically, if you're down 30% from its peak, on average, it will take 1 to 2 years to get back to its original location, which means a 30% gain historically within 1 year once you're at that trigger point. So that's why I say all investors should understand all of the pieces. I am a big real estate guy, but I do take advantage of the stock market when there's a sale. Exactly like I want to take advantage of the real estate market if Mike tells me there's a sale. There's some opportunities out there. So
There are.
I hope that answers your question, Kiavash. But like I said, everybody is individual. I think that you're doing yourself a disservice if all of your money is in one sector but not in the other, though.
Okay.
Mike, was there another question?
Yeah, we've got some more questions here. So Donald McNally said, hi, as an investor, is it to purchase as property as an individual or through a holding company? So Donald, the way I would look at that is talk to your accountant and your financial planner in terms of how to best structure that. For me, I'm a realtor. My job is to help you find a property and get you the best deal in the safest way possible. In terms of structuring that, do talk to your accountant first, okay? Because they know your personal financial situation, and then work with your accountant, work with your financial planner, work with your mortgage broker. They can help you with that. But there are significant advantages to buying through a holding company, but only for the right people who have, you know, the certain kinds of businesses or certain kinds of tax arrangements. And if you want a referral to a good accountant that can help you with this, I've got somebody great, and I'm quite sure that you know, Christian can advise on that. Did you want to add anything to that, Christian?
Yeah, the only thing, basically to echo that as well, is I would essentially not buy a piece of real estate lightly through a holding company without getting professional advice. You know, someone saying, a buddy of mine did it through a holding company, I'm going to do it. Or my uncle did it through a holding company over dinner, he said to do it. He never looked at any of my financials. He doesn't know my income. He doesn't, and then all of a sudden you're taking this dangerous advice, very, very dangerous advice. You know, and that's the whole point of having a professional involved. And they could see, you know, and even some good accountants can't do what a good financial advisor can do, and that's to actually do a cost benefit analysis to see which one mathematically makes the most sense. You know, to give a quick answer, if you're incorporated and you've got an operating company and you can move money from the operating to holding company, and you've got a lot of retained earnings, and you're in a very, very high tax bracket, holding company will probably make sense, especially if the place is cash flowing. But that's just a really quick back of the envelope. I'd have to get in there to look at it a little bit more closely.
Okay, we got another question from Ewan Hardy. Now people used to work from home when pandemic is over. Do we expect people will work at downtown area? What is the good investment for the future, downtown or suburbs? So I've been thinking a lot about this, and I think people will come back to the office. I think certain people will work from home because the COVID-19 epidemic has proved to more senior people, older people, more mainstream-minded people within business organizations that it is possible and effective for people to work from home. But I also think that the office and working together in close proximity has distinct business advantages. And I think once we have a vaccine, I think a lot more people are going to be coming back to the office and are going to be working. And I don't think we're seeing the end of the office, but I think we're seeing certain businesses, certain people where more people are going to work from home. So, you know, in terms of opportunities, I quite frankly see the core as being a really good opportunity right now. And places that, you know, before COVID-19 were busy with lots and lots of people, which aren't now, because I think once we have a vaccine, a lot of things are going to change back to normal. I'm not saying 100%, everything's going to go back 100%, but I think a lot of things that aren't happening now are going to happen. And I think the core, and I think downtown is somewhere you should really look. And I think the suburbs right now, you know, I think things are expensive. And I think when the vaccine comes, you're just going to see the suburbs soften. And I think you're going to see the downtown cores and the cores of cities really pick up. But that's my opinion, and my crystal ball is as good as yours. What are your thoughts, Christian?
Yeah, I remember in 2008, I had a lot of clients saying, I believe there's an opportunity in the stock market. I believe there's one in the real estate market, and I want to do some stuff in the real estate market. Which direction should I go? Now, this is the part that I wanted to add over here. In '08, it did not matter what piece of real estate you bought in all of the Lower Mainland or in the Fraser Valley. 10 years later, it all went up. Every single bit of it went, none of it went down. So if you were to say, hey, where is the opportunity? Should I be investing in real estate right now? If you have got a 10-year time frame, the answer is you're going to make money. What I'm concerned about as a financial advisor is what's the cash flow going to look like in the short term? Are you going to be negative $1,000 because you bought a place that you didn't know how to assess? Are you going to, be over leveraged to death and you're going to be living off of mac and cheese? I care more about, can you afford what it is you're planning on buying? Is it going to have good appreciation? Is the vacancy going to be low? That's where my concern is going to be. You can't go wrong with real estate. Give it enough time.
But when you're looking at a revenue property, you got to buy right. You want cheap, simple, high quality. You don't want fancy. You don't want beautiful and gorgeous and something that is going to blow somebody away. You want one of many that if it breaks, it's easy and cheap to fix and it doesn't break your heart. But anyway, if you're interested in that sort of thing, we can talk about that privately after. We got some more questions here.
Absolutely.
Okay, so, and this I think would be something good for Christian. I was wondering, what is your professional opinion about investing in real estate versus REITs? So I'll let Christian talk on REITs because that's something I don't know. I know very little about.
Okay, so here, I don't want to throw dirt on REITs because I have friends who actually run REIT companies. But I would say this: a REIT to me is another category of a stock. So there's healthcare, there is, consumer staples. Now REITs is just another category. You own a piece of a lot of bits of real estate and you're getting an ROI from it. So if you said, hey, I want to invest in real estate, I want to invest in REITs, that's more or less saying, I want to invest in the stock market. That's what you're saying. I want to invest in the stock market. It's very different than what Mike and I are talking about. If you want to get exposure to all of the advantages that we've talked about, rental cash flow, capital appreciation, tax deductions, then you're not doing REITs. You're not doing REITs. There's no tax deductions with REITs. So really, to me, that's just a subcategory. I'm not saying to not do it. I'm just saying that that's not exactly what we're talking about. I'm talking about you personally having your name on title for a piece of real estate where you're the landlord, you're the owner, and you're the one responsible for collecting in the rents, but you also get the tax deductions and you get the capital appreciation and you get the infinite cash flows later. That's what we're talking about over here. So REITs and what we're talking about, I think, are completely different. To me, that is just a diversification of your stock portfolio.
But also another thing to think about when you're deciding what to do is look at your lifestyle. Are you super busy? Do you have time to deal with tenants? Yes, no, all those sorts of things. So again, these are not one size fits all pieces of advice. You want to talk to an accountant, you want to talk to a financial planner, you want to talk to a mortgage broker, you want to talk to a realtor, and hopefully that realtor is me and hopefully that financial planner is Christian. But you need to talk to professionals to get a customized solution for your personal retirement plans, investment plans, and so forth, because everybody's different, everyone's situation is different. And so look at it that way. And that's the approach that I would take. We've got another question from Yasaman. Is the North Shore a good investment at the moment? The North Shore is good. I like the North Shore. I live on the North Shore. I think there's some opportunities with pre-sale condos in the North Shore. There's some projects that pre-sold in Lynn Valley and elsewhere that, those properties are worth less than what people originally paid for them. So I think there's some sellers in those areas that, you could do really well with if you're willing to buy pre-sale condo assignment there. Yeah, I think the North Shore is good, but, again, it's such a big area. There's so many different types of properties. It's there's a lot of opportunities, but I do think, there are some good opportunities. If you'd like to learn more about that, feel free to reach out to me after.
Yeah, I think we'll make this one our last question over here, but I think I too live on the North Shore. My property values have gone up quite a bit since I moved here. And I remember when I moved here, I was looking at other areas, and one thing that seems to stay true is that the North Shore tends to hold its value always. So if the real estate market takes a hit, you'll find the North Shore will be one of those types of places that doesn't. It maintains, or it holds, or it doesn't get hit as hard. And the pendulum swings the other way. When everything is up, the North Shore tends to be up an extra 1 or 2 points on top of everybody else. I think it's a great place to live. Now, to invest in it as an investor, I fall back on getting a good financial advisor, because if you said, oh, I'm not going to live there, Christian, I just want a good place to invest, and I have $100,000 that I could put down, I would do a full cost benefit analysis, and I would do a cross section. North Shore, Burnaby, Chilliwack, sometimes the best deals are the places you would never live in, but you just said you're not going to live there.
I agree.
If it's to live, there's tons of advantages. Mike and I will talk your ear off about how great the North Shore is to live. But if it's to invest and put your money down, get a trusted advisor who knows what they're doing in real estate, who could do a cross section of a lot of different types of real estate.
Case in point is the Fraser Valley. So in the Fraser Valley, you're getting cap rates that are far higher than anywhere west of Surrey, okay? And you're getting capital appreciation far better than you're getting in the core, anywhere west of Surrey. So if the key to look at it with all of this stuff is what is your personal goal? Okay, are you looking for capital appreciation? Are you looking for revenue? Are you looking for tax efficiency? What are you looking for? What stage of life are you at? How old are you? Are you young, so you've got longer investment horizons? Are you, an old fogey like myself, or maybe Christian, but I don't think so. How much time do you have? What's important? Because as people get closer to retirement, they want more certainty, they want more cash flow, whereas when they're younger, they don't necessarily need that. So again, the thing to do is get in touch, think about what's important to you, think about what your goals are, talk to an accountant, talk to a financial planner, talk to a realtor, talk to a mortgage broker, and then create a solution that works best for you to help you reach your financial goals. Because that's what this is all about,
Sure. So what I want to do over there is I want to end it off there. I hope everyone could join us. I hope everyone connects with us. If we didn't get to your question, figure out who you want to ask it to directly and give us an email. The other thing I want to say is this session has been recorded. And when I hit stop on the recording, within about 24 hours, I'm actually going to send the recording to everyone who is registered. And you might look at the recording and you might say, hey, I already listened to this. Feel free to share it with your relatives. Feel free to share this with your friends. If you got some great piece of advice from this, or somebody, by all means, share it. We're trying to educate as many people as possible. And so with that, thank you, Mike, for coming on. We'll see you next month. I hope the rest of you are already going to register. And when you do get the link to this recording, but you've already heard it and you've got what you wanted, share it with a friend. We're in a COVID environment. There is no more water cooler where you could talk to your friends about this, but you can share it. Okay, so I'm signing off over here. Yep.
Just one last thing. I'm also going to have it all transcribed. It'll be on Vancouver New Condos and MikeStewart.ca with the video, full transcription. Should be up next week. And if you guys need a copy of it, feel free. I can send it to you as well. So
perfect. All right.
Thanks, guys.
Okay. Thank you very much, Mike.
Bye, guys. Thank you.